Welcome back. The Midcap index may be flat, but so many individual stocks are shining. Shringar House, the other stock that debuted on Dalal Street, the House of Mangalsutra, 12% up on that. Mirza International, 13%. Premier Explosives has had an explosive move since morning. Stock has been higher and it continues to maintain those gains. On Mobile Global, a stock that Hormus was earlier highlighting, it was down last year, but today it's up nearly about 10%. PC Jewelers, India Pesticides, Banco Products, Red Tape, Bellrise Industries. And Bellrise Industries, there was an investing note. 5 minutes left. Mayuresh Joshi is now joining in on the show. Mayuresh, the stock of the day undoubtedly is Urban Company. Those who got in the IPO got lucky, but for those now, who are still waiting to buy this company, what would the advice be?
Afternoon, Rima. So I think for those who are wanting to buy, obviously you have to wait for declines to come through on the stock. For those who are having it, I think it really depends on your risk reward. If you're probably looking at a very short-term window, partial booking makes sense. However, I think the comments that the management has probably put forth in terms of creating a full value ecosystem as homes are concerned, and probably homes being the driver going forward in the next few years, I think that's very positive. But I think it's going to take a long periodicity of time to probably ensure all the services that they probably got in mind get implemented amidst all the competition that might come through in the next few years. Obviously, their first element from a balance sheet perspective will be to probably ensure that EBITDA margins start propping up and profitability as far as bottom line is concerned. So in my own sense, I think anybody having the stock with a medium-term view can probably still ride the momentum. A short-term view probably have partial profit looking done. Fresh investments, wait for declines.
What's a good good entry point for Urban Company? I mean, what kind of a decline?
No, so I think it's too premature at this point of time. But again, I think our own sense is that let's wait for the first con call to probably happen. Let's see what their strategy is, what their vision is, and the numbers that they're putting through. And based on that, maybe even a 10% decline might be a feasible entry point, or maybe even larger. So it all depends in terms of what they probably give out in terms of their guidance.
All right. What about Bellrise, Mayuresh? What's the view on that one? Bellrise, the stock I think came with the IPO at around 100 rupees ballpark. In a few months, the stock is at around 155 rupees. I recall Jefferies, I think, was quite bullish on it. Investec has come out with a note as well. They as well are quite bullish. At around 160 rupees, what do you think? Bulk of the good news in the price?
Absolutely, Nigel. First of all, I think a belated birthday to you. I think I missed wishing.
Thanks a lot, Mayuresh. Thank you.
But yes, I think the valuations are a tad bit dearer as we speak. And therefore, I think it really depends on the numbers delivery that Bellrise can probably give in this quarter, the guidance that they probably give us or the street as well. And on that belief, I think the stock might probably sustain its premium valuation. So in that regard, I think wait for declines to come.
Okay, that's Bellrise in focus. Mayuresh, hi, good afternoon. Good to have you in. What about the listing of the day? Now, those who got into Urban Company, I'm not saying calling their services, I mean, the ones who've not gotten it, what else? When beyond this, should you go back and look at other platform companies? You still have the Swiggies and Zomatos of the world. But it's very clear that this is a very, very active space. How are you looking to play it?
Afternoon, Survi. No, absolutely. I think the tech companies, fintech companies is something that are going to do phenomenally well going forward. And I think a clutch of them will probably do well. So I think out of all the companies that you probably got, I think valuations probably are sky high as we speak, based on the assumptions of a blue sky horizons of projections that one is probably looking at. But as I said, for Urban or Swiggy or Zomato in my previous interactions as well, I think valuations are a tad bit too much in terms of how the stocks are priced at this juncture. And they're priced to perfection in terms of numbers delivery. I think 1 or 2 quarters in terms of a numbers miss and the de-rating can be pretty harsh in terms of where they are standing at this juncture. So optimistic in terms of the space, but I think valuation discomfort is something that is bothering us at this juncture.
Okay, all right. Mayuresh, thanks a lot for that. Request you to stay with us. For the time being, we're almost done with market. So let's do a quick recap of what went on in today's trading session. The Nifty goes on with good gains, close to under 100 points return is what we are seeing on Prime Minister Narendra Modi's birthday. The Nifty up 100 points. The Nifty Bank doing a little bit better. That was up 350 points in today's trading session. What led the way? From the banking names, you had SBI that was up and about in today's trading session. Kotak Mahindra Bank as well went on with a gain of close to under 1.5%. Besides the banking and financial names, you had Tata Consumer that was up 4%. Big move is what we saw out there. BEL, they're winning a large amount of orders. The street likes it. That stock was up. CLSC upgrades. Ultratech Cement, stock goes on with a gain of under 1%. What didn't participate? You had Bajaj Finserv that was down close to under 1%. Titan was down close to under 1%. Hindalco as well was down close to under 1%. And since the metals came in for mild profit taking, you had Vedanta that had an added spoke to it because you had the demerger, the NCLT hearing of the demerger. We didn't get any favorable outcome, and now all eyes are on October 8th. So the stock actually ended down with a cut of around 1%, but actually recovered close to 2% from the low of the day. From the broader markets, the stock that really grabbed everyone's attention was Urban Company. Big bombastic returns is what we saw today.
Indeed, closing up 63% higher on that. The other notable movers include Shrinkar House, the other new listing on Mobile Global, PC Jewelers, Bellrise Industries, KNR Construction. Many PSU banks were higher in trade. In fact, Bank of Maharashtra, PNB, State Bank of India in the frontline pack, Canara Bank. PSU banks continue to see a lot of interest. On the way down, you had softness in Vodafone Idea, retracing some of yesterday's up move. NHPC, Ola Electric ending in the red. All in all, the Nifty closes well, higher again, up about a third of a percentage point at 25,350. The Sensex at 82,700. It's a wrap on closing bell. Don't go anywhere. Markets Forward is up next. Dalal Street extends Tuesday's gains. The Nifty ends at an over 3-month high. Banks see buying. The Nifty bank gains over 0.5%. Midcaps underperformed the blue chips.
The urban company stock races up after listing at a 58% premium to its offer price of 103 rupees, implying a market cap of over 23,000 crores. The strong show points to big investor appetite for top B2C platforms.
Dreamfolks hits lower circuit as it exits the domestic airport lounge business. AB Fashion and Retail gains after a new brand launch, while Shringar House also lists at a 14% premium to its IPO price.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Reema Tendulkar. Reema, what a day. We're building on gains over 3-month high for the Nifty. No complaints.
Indeed, and there was this minor wobble, a drop that the Nifty saw at around 230, but that was bought into towards the end of trade. And the Nifty finally ending comfortably above 25,300. It's just been a strong showing for the last 2 weeks. We had 8 good days on the trot. We consolidated on Monday, saw a bit of profit booking. Yesterday, we were higher. And today, once again, markets closing up with a gain of about 0.3%. And the good part is banks led the action today. You know, we've been complaining that banks were struggling. Yesterday, it crossed 55,000 in terms of a headline number. And today, nearly at 55,500.
Yes, absolutely. So no complaints really coming in for the markets. It is the Bank Nifty which really outperformed with a gain of around 0.6%. And what stood out is that there are slow and steady gains. For example, on a month-to-date basis, the Nifty is already up around 3.7%. So that's the kind of gain that we've seen on a slow and steady basis for the markets. And separately, just want to point out that the broader markets weren't left behind with a gain of around 5.6% on a month-to-date basis. So that's how the markets panned out. As of now, we have the Nifty, which is cruising at around 25,330. Let's see what tomorrow holds. But let's tell you what we have lined up and in store for you. We start with the top movers and shakers of the day with Hormuz. The cement space was buzzing in trade over a positive brokerage note and commentary, while MCX also jumped up. The SEBI chairman said they would allow banks, pension funds and foreign investors to trade in non-agri commodities. Last but not the least, we delve into the key market events to watch out for in tomorrow's trading session. But on to our first segment of the day. Hormuz now joins in to tell us all of the top movers and shakers of the day.
Hormuz. We've been mentioning right through this week that the banks will be the sector to watch out for, and it is delivering on that. The Nifty Bank today doing well. PSU banks were the ones that were shining. Some remarks coming in from the DFS secretary as well. And look at these gains. Gains anywhere between 3 to 4%, including those in SBI, and the low float PSU names like Central Bank, UCO Bank, IOB also did fairly well in today's session. Defense stocks continue to power up as well. Garden Reach, another day of gains for the stock. Zen Technologies was locked in a 5% upper circuit. Gains also seen in Data Patterns, Idea Forge and MTAR Tech continues to move higher ever since the management spoke to us last week, setting out some strong revenue growth targets for the next few years. Among the newsmakers, of course, Vedanta grabbed the spotlight in the second half of the trading session. It fell as much as 3%, but then recovered from the lows. Aditya Birla Fashion is the one that we wanted to speak about, ended 4% higher today. MCX and Dreamfolks are 5% lower circuit, and Hyundai Motors after that wage settlement announcement ending 2% higher as well. And lastly, stocks that ended at a 52-week high in today's session. Banco Products continues to move higher, another 8% added today. Affle had a good day. Shaily Engineering, Lumax Industries also a 5% advance here, ending at a 52-week high. Back to you, ladies.
Thank you very much for that. In fact, those were the top stock movers. Let's go across to our guest, Mayuresh Joshi. We were in conversation with him even on closing bell. And let me invite Shrikant Chauhan, EVP at Kotak Securities, on the show. Shrikant, let me start with you. We thought there would be some sort of resistance around 25,260, 25,300, but markets have comfortably eased past it. What next, technically, and what were the stocks that look interestingly poised for the next two trading sessions?
Yeah, good afternoon, everyone. So for Nifty, it is very clear that it is heading higher. It has crossed its previous swing high level, which was around 25,150. And now, yes, it is facing resistance because after hitting the levels of 25,350, 400, we can see almost 80% retracement of the entire fall that we witnessed from the levels of 25,675 to 24,300. And most of the time, whenever the market retraces 80-85% of the entire fall, we see some profit taking in the market. But the way the market recovered and there is a broader participation in the market, I'm to say banks, PSU banks, as well as Nifty IT index, it's supporting in this up move. That means the broader strength of the market is much, much better. And in case if there is any correction, then it will be an opportunity for creating furthermore long positions. Now, the market should not break the level of 25,000. That's the condition to watch out for. And in case if it sustains about 25,000, then there could be very high chances of crossing 25,675 and eventually maybe 26,000. So broadly, I'm of the view that tomorrow, because of any reason, market corrects backs to the levels of 25,150, 100. There we should look for taking some contra bet of going long in the market.
Okay, all right. Well, let's talk about the big stock of the day and the big debut. The new age tech firm Urban Companies saw a stellar debut on the exchanges, listing at a premium of 60%. Manglam is here with all of the details on this excellent debut. Manglam, over to you.
Well, it was a stellar listing indeed for Urban Company, and this is a company that, moves unorganized daily home services into the organized industry, and the street really liked it. For starters, the issue was very well bid for. A 1,900 crore issue saw subscriptions of over 104 times. Interestingly, while the qualified institutional investors led that, we also saw oversubscription come in from HNIs, the retail investors, including the employees of the company that subscribed to the issue by over 37 times. So that was a big positive, or that told you that there is going to be a big up move on the listing itself. The other reason why the stock did extremely well was the overall size of the opportunity. Less than 1% of this market is organized right now, and the street believes that this will likely grow faster. And as we've seen the case with platform companies, as they turn a corner, profitability rises exponentially as well, and that's what the management had said too. They are looking at profitability over the last few years. The 700 crore incremental revenue that they've added, that's translated into 300 crore plus EBITDA. They also have the extended business of hardware native, which is showing good growth, and operating leverage is likely to play out there as well. The street believes this 35% revenue CAGR, if that continues, and the operating EBITDA margins doubles from current levels of around 1.5%, then maybe the stock at around 100 times, given the growth potential, is not particularly very expensive, largely because of the growth potential that we've seen. Mind you, the market cap of Zomato is over 3 lakh crores. That of Swiggy is over 1 lakh crores. Even after a big stellar rally on day one, Urban Company market cap is just around the 25,000-26,000 crores.
We see our business in parts. There is the very profitable core in India, which is growing well. It has been profitable for the last year or so. It had a 3% adjusted EBITDA margin as a percentage of NTV last year. That went up to about 4% in the first quarter. And I think that core will have to continue to compound well, grow well, and continue to compound profitably. The new segments where we are, which is InstaHelp, Native, I think these are the areas where we will invest. And at the right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy.
A lot of thoughts running in my mind at the same time. Right from times we spent together in college, when we, after college, decided that we need to get together and do something in the service of India over the next many decades, to the many months the three of us spent the streets of Delhi trying to really identify what business we should build that will create large impact in the lives of millions of Indians and be a company that they will look forward to, a company that will make a difference to their daily lives. And then like a fast forward of the last 11 years, while I was trying my best trying to hold emotions back.
All right, so that's the big debut. But let's move on to the cement sector now. Stocks such as Ultratech Cement and Shree Cement gain, buoyed by ratings upgrade from global brokerage firm CLSA. Nigel is here with the details on why CLSA is betting big on the sector. Nigel.
Well, that's right. CLSA came out with a note on cement, and they are turning more constructive on the space as they see an uptick in terms of profitability. The few points that they mentioned, they are estimating upgrades for companies which will be helped by pricing discipline and also will be helped by coal cess elimination. So that's what's broadly going to help them in terms of profitability from here on. They go on to say that Ultratech is best placed to benefit from cost savings initiatives as well as the organic expansion that they have already announced. In terms of preference of stocks, they upgrade Ultratech to the high conviction. They have an outperform rating out there. The target price they placed at around 14,700 rupees per share. Shree Cement out there as well, they've upgraded to an outperform. The target price at around 33,500. And Ramco, they've upgraded to hold. The target at around 1,040 rupees per share. They maintain their outperform rating both on Ambuja Cements as well as on Dalmia Bharat. So CLSA turning more constructive on the cement space for a whole host of factors. Back to you.
Thank you, Nigel, for that. Mayurish, there is a lot of optimism going, for the cement companies. In Q1, also we saw a recovery in EBITDA per ton, and the expectation is pricing will hold the EBITDA per ton. The realizations will remain fairly healthy for the full year. Do you like cement as a sector and your preferred pick?
Yes, we do, Rima. And again, I think the rationale that has been put out in terms of reasonable volume growth expected Q3 onwards, I think that should sustain quite reasonably. Second, I think the consolidation that you've probably seen in the industry and are witnessing in the industry as well, that will lead to better pricing. Third, I think the input costs have largely stabilized, which now means that along with the internal power dynamics that is taking place, whether it's waste heat recovery or otherwise, the overall cost should start coming down. And a combination of these factors will mean that volume growth should sustain going forward, pricing should be in their favor, margins should show improvement, which means the reported EBITDA on an absolute basis and EBITDA per ton should see sequential improvement as we head into the next few quarters. Obviously, I think the capex from the government when it comes to rural, urban, affordable housing, infrastructure should sustain, obviously aiding and abetting the entire growth that one probably looks at. So yes, I think positive on the sector as a whole. Out of the large stocks, large cap stocks, Ultratech, JK Cement, is something that the ratings and rankings look extremely fine as far as markets Midcap is concerned. Within the midcap universe, what we've kept on our radar is JK Lakshmi Cement, with capacity expansions expected and all these factors acting as tailwinds.
Okay, Shrikant, would you have any view on the technicals of a couple of these counters? On a week-to-date basis, the likes of Ultratech, JK have rallied around 2.5–3%. Any upside from here on?
Yeah, I think like Ultratech Cement or even if we consider Shree Cement, both are very close to their resistance levels on long-term charts. But if we consider the technical pattern of Dalmia Bharat, then there we can see furthermore continuation in the near term. Currently, it is around 2,500 sort of levels. It is forming ascending continuation triangle formation. And on the dismissal of the level of 2,500, we can see the levels of maybe 2,750 or 2,800. So there is like more juice left for Dalmia Bharat as compared to Ultratech or Shree Cement. But yes, in that space, specifically, I'm going to say out of these two stocks, Shree Cement should do well. It is very close to its resistance, but overall formation is suggesting us that the stock can perform from here.
Got that. Let's move on then to the other big story. In a boost to commodity exchanges, SEBI chairman has said the regulator would permit banks, pension funds and foreign investors to trade in non-agri commodities. He said this at the sidelines of an MCX event. He added that boosting the commodity market is a key priority of the regulator. Listen in.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodities space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging.